Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be studying the prescribed format which is required to prepare a bank reconciliation statement. We'll be studying certain formulas and we'll be studying how to prepare the balance or how to prepare the bank reconciliation statement considering favorable and unfavorable balance. So, as we described, what we need to understand is there are certain categories which we have already learned in the previous lecture. One, which might be a time gap category. Second, which might be the errors committed by the human. Now, because of these specific reasons, we have to prepare a bank reconciliation statement. There will be one starting point and there will be one ending point. The starting point will be already provided in the question. What you need to find out is the end point of the answer. That should be the answer what you need to look after. So there is a prescribed format, there is a prescribed formula which you need to understand, which you need to follow to ensure that the bank reconciliation statement is prepared flawlessly without any errors in it. So what you need to understand is something written here. We have the format mentioned here. We have to prepare for rough work two specific accounts, one being the cash book, second being the pass book. So when we talk about the starting point, we need to understand the starting point can either be a favorable balance or an unfavorable balance. If it's a favorable balance, what you need to do is something what we'll be teaching you. If it's an unfavorable or a favorable balance, you need to work according to that system itself. So the first point is that we'll be starting with a favorable balance. So for example, let's take, we have two books here. We have mentioned cash book. We have mentioned pass book. So the cash book has two sides. One is a debit side, second is a credit side. Similar situation in the pass book where one we have a debit side and one we have a credit side. So wherever I've mentioned a positive sign, that is add, these balances show that there is a favorable balance, there is a positive balance, which is a good sign for every book, which is a good sign for every possible book that we have in terms of accounting transactions. Wherever there is a negative sign or a minus sign that has been involved, this shows that it is an unfavorable balance. That means either the balance is in overdraft or there is excess of negative balance in the account. So as we were discussing that the favorable balance and the unfavorable balance is shown as per the sign which is mentioned in the cash book and the pass book. So wherever I have mentioned a positive sign, that is a plus sign, that shows a favorable balance. And wherever a negative sign has been mentioned, that shows a negative balance or an excess balance in the account. To give you an example, if I have rupees 10,000 as a debit balance in my cash book and a credit balance in my passbook, that means I have 10,000 in my account. If I have the same thing as a credit balance in my cash book and a debit balance in my passbook, that means I have 10,000 in negative, which means if there is a next deposit in my account of 20,000, I will still have just 10,000 and not 20,000 because the negative balance of 10,000 will be adjusted with the 20,000 deposit that has been made to the account. So a negative balance is always an unfavorable one and a positive balance is always a favorable one. So if you have the starting point being a favorable balance, the end point of your question will always be a favorable balance. And vice versa, if you have the starting point as an unfavorable balance, the negative or probably the answer of your question will always be negative or unfavorable. So to understand, we'll be preparing certain format here. We'll be going through what is the requirement when it comes to preparation of a bank reconciliation statement. However, to understand first, we need to understand certain formulas. I'll be writing down certain formulas which I'll be explaining in this lecture and how to prepare a bank reconciliation statement. Let's go ahead with that. So what I've mentioned here is favorable book transaction effect and unfavorable book transaction effect. As you can see, favorable book has a black box which has the right sign, and unfavorable book has also a black box which has the negative sign or probably the wrong sign. Now I'll tell you what this means. When any transaction that you're dealing with, if it refers to the favorable book, which can be either the pass book or the cash book, then you have to do exactly what the sign says. If the transaction was supposed to be added and if it refers to the favorable book, that means you will be adding the transaction amount. If the transaction was supposed to be subtracted in the favorable book, and if the favorable book is correct, then the transaction will be subtracted from the account or from the amount. However, if the same transaction refers to unfavorable transaction or unfavorable book, which the book is wrong, then in that case, if the transaction has to be added, you will be doing opposite of it. That means you will be subtracting the transaction. In a similar case, if the subtraction transaction refers to an unfavorable book, then in that case, you will be adding up the transaction. To look after, just go through this. So as you have seen in that black box where I've mentioned that the transaction, if they refer to a favorable book, it goes as per the signature. That is, if there is an adding, then has to be an adding transaction. If there is a subtraction, there has to be a subtraction in the transaction. However, when it comes to unfavorable transaction or unfavorable book transaction, then in that case, the transactions are done completely opposite. That means if you have to add, then you will be subtracting that specific transaction. And if you have to subtract the transaction in the bank reconciliation statement, you will be adding up the transaction. So this is the specific formula which we'll be using for preparation of bank reconciliation statement. We'll be going through the preparation of bank reconciliation statement in the next video, and we'll be understanding with some practical sums using how a favorable balance can be used to find out the favorable balance of the other book, and how the unfavorable balance of either the cash book or the pass book can be used to finding out the unfavorable balance of both of these books. So thank you for watching Ekeeda. Keep subscribing to Ekeeda.